Yep, all yeses in the chat as well. If they can all see it. There, a lot of the guys in my premium and really just in the Discord and even in the mentorship, they've all since you last came on started using MentorQ. I haven't seen anybody say that their trading's gotten worse since they've started saying it's an understatement. Everybody's really excited with how the platform and just the software is working, and I can say that same thing for myself. I shorted the Gamma 4 down through the Gamma 3 today, and it's been the same thing every single day. So excited for today's update, Fabio.
Great. Let me know when you guys want me to start.
Go for it.
So the first thing, I think we had a very good session last time, and I think is available on your YouTube as well. But basically, just to point out why we are talking about option data and why even if you are trading futures, you basically have to account for what's happening in the market, because you're going to be kind of like left blind, and understanding what's happening in the option market is very, very important, right? So what you see here before we go into the platform is really the growth of option volume over the past kind of like 10 years. So we just started 2026, and this was as of January, so I haven't got the data for March yet. But basically, we can see that the trend is not stopping, right? So essentially, the reason why you need to look at options is because options are mostly executed by market makers. So 80% or maybe more of option transactions are actually executed by dealers, where there's not really a buyer or seller on the other side, right? So whenever you're trading futures or whenever you're trading stocks, most likely there's going to be like a buyer or a seller that is going to execute your transaction. So the hedging activity on those trades is kind of minimal, right? With options, because there's so many strike prices, there's so many underlying, there's so many expirations, most of the time, there is never a buyer or a seller. So there is somebody who's providing the market. By doing that, they are taking on a risk, and they need to hedge that risk. That's why those gamma levels become very, very important, right? So if we go back here, obviously you mentioned the short here. It's not common that we are actually dropping at these levels, and then obviously once we go through a level, then you have this inflection point. So the most important part, I think, is think about technical analysis. So whenever you use technical analysis, you use it looking at past data, and you believe that if you're looking at the resistance area, that there's going to be somebody here that's going to come in and sell because of the retest of a previous level. Think about that with option data. This reaction needs to happen because on the other side, market makers need to hedge. So it's not that you're hoping that somebody's going to come in. You know that something could happen at this level, right? So it's kind of like looking at market structure, market mechanics, and so on. So going on to kind of like today's FOMC. So first of all, if we look at the estimates, if we look at what the analysts think, they believe that the rates are going to stay steady. So they believe there's not going to be a big change in the rates. So obviously, that's like what the market thinks. But again, what's going to happen, we will only know it in an hour. The most important part, if we start looking at the data here, and you should see our SPX here, is really understanding where we're standing right now. So we are in a negative gamma condition, and we see all red when we look at our Q score. This is our proprietary model that will highlight basically based on different factors where we stand for the asset. So we are in a very low option environment, low momentum, very high volatility. And of course, obviously, we can scroll down here. So the first thing that we want to do, for example, we can look at our zero ETEs right here. So you have this very important level if you guys trade SPX or ES. We can also look at NQ in a second. But basically, there's a lot of kind of negative gamma here. You can see how much gamma is expiring today. There's about 4.39% of negative gamma expiring. And of course, once you come and look at the expiration, you can see here over the next few days if we're standing in a positive negative gamma and how much is expiring. So on Friday, we have about 24% of negative gamma expiring. Why is that important? Because at the end of the day, market makers will not need to hedge any longer those active positions. So there's a couple of things that can happen at the end of Friday. Investors are going to hedge or are going to buy a different strike, a lower strike or a higher strike. So we're going to see a positive or negative gamma um, for the next week. Or if they are simply closing those positions, then market maker are going to have to release those hedges. So we could see, for example, some negative flow or some technical movement and so on. So that's the important part. Then, if we go into Quin, I asked, and obviously we're going to introduce that Jordan in a second. But basically, I just asked Quin a very specific question. I want to know the JAX index percentile for SPX over the past year. What does that mean? I want to see how much gamma and delta we have today compared to the past 1 year, because I want to see if there is a lot of gamma compared to what has been in the past, or if we are sitting in a low percentile where we are not seeing a lot of gamma. That means that maybe there's going to be less activity. So what's really interesting is that we're only sitting at the 11.8 percentile. So what does that mean? That if we look at this chart here, at the total gamma exposure chart, on 90% of the days in the past year, we have seen more gamma than today. So that's, for me, is like a sign that obviously there's probably going to be a less volatility because we don't have such a high concentration of gamma. So what I did here again, think about, you would have to get this chart for the last 252 days. You would have to compare it, all the values, stuff like that. And then we just did that very simply with a simple query here. So I think that's kind of like the power. And let me know, Jordan, if that makes sense.
Yeah, to me it does. Yeah.
And also, Jordan, let me know if you want me to recap some of the things we did last time, or if you want me to just show what's new basically on the AI
Yeah,
side.
yeah, I think if you do a quick overview of what we talked about last time, just for the new people in here, and
Yeah,
then we can go over the new stuff.
yeah, sure. So just very quickly, guys, we saw this chart here. So this is what we covered last time. Basically, why do we talk always about gamma levels, right? So we saw that the option volume has grown significantly over the past 10 years. So we know that on the other side, market makers are taking a risk every time you do an option trade. So even if you don't trade option, think about that, because of that large volume. Whenever somebody does an option trade, on the other side, a market maker is taking the risk. To offset the risk, they're going to do an activity called delta hedging, and we're not going to spend maybe time today talking about that. But essentially, from a future perspective, they're going to either buy or sell the underlying to be completely delta neutral, meaning that even if the price of the asset moves, they're not going to lose money on that position. So they have to keep buying and selling the underlying. So what does that mean? That means that it creates flows in the market, whether it's futures, whether it's SPX volume, whether it's like a Tesla stock volume, and so on. So as a future trader, you want to understand that because of that volume, you're going to see more and more trades coming in, not because something is happening, but because of this delta hedging activity in the market. So very briefly, why is gamma important? Because gamma is really the sensitivity of delta. So it shows us how fast delta moves for a change in the underlying. So looking at gamma is very, very important because it tells us how much the market makers need to hedge as delta changes, so as the price moves. So here we have a very simplistic form. We're not going to spend time, but if you have questions, let me know. Why did I say that this movement is mechanic? Because every time an investor buys a call, the market maker is short a call, and to hedge, they need to buy the underlying asset, whether it's futures, whether it's the stock. Whenever an investor sells a call, then the market maker on the other side is long a call, they need to sell the underlying. So all these trades and movement results into flows that comes into your asset, whether it's futures, stocks, ETFs, indices. So why is gamma very important? Because as the price changes, if gamma changes fast, dealers need to hedge faster. So they need to actually hedge more and more. So the more gamma we have, the more hedging they do. So that means that more gamma equals more volatility. And whenever we have low gamma, that means that delta changes much slower. Dealers have to hedge less, and the result is really a more stable price behavior. So here we can see basically in the chart that I showed you, the green histogram bars is positive gamma, the red bars are negative gamma, or put gamma exposure and call gamma exposure. Then, of course, we have our levels, we have our core resistance and our put support. Think about those not in technical terms, but in terms of investors positioning, right? So think about if we see here a core resistance of 570. This was taken, is an old screenshot, but it doesn't really matter. So that means that the market thinks that the price could get to that level, because think about options are forward looking. So basically, whenever investor takes a position in an option contract, they have a time to expiry. So they have an expiration. So they want to make sure that the condition that they believe is going to happen within a time frame that they define. So if we see a lot of gamma at a certain area, that means that somebody is really thinking that the price could get to that level. And whenever we see a certain gamma to the downside and this piling up to the downside, that means that probably the market thinks that the price could get to that level. And we're going to go in and see it in a second. And then what we do there is we then draw those levels onto our different integrations. As Jeroen said, we cover about 10 platforms, TradingView, NinjaTrader, TransSpider, Atas, Quant Tower, Bookmap. So we're basically almost on all the platforms that you guys might use. And then the next step is really the concept of positive and negative gamma, which I mentioned at the beginning. Why is this important as futures traders? Because that's going to dictate the way you prepare the day and the trade management of your trade. So let's imagine that you trade NQ and you normally have, I don't know, a 30-point stop loss and you're aiming for a 3-to-1 risk reward, right? If we are in positive gamma, let's say we've been in a positive gamma environment for the last 4 months and that has worked really well for you. That's great. Let's say that we turn into a negative gamma environment. That needs to change because that might not work any longer. And the reason is very simple. When we are in a positive gamma environment, on the left-hand side, you can see how market makers are hedging. So they're going long when the price goes down and they're going short when the price goes up. This results in a lower volatility. So that means that your stop loss of 30 points is working really well and you don't get hit. And maybe if you get the right side of the trade, you also make great profit. When we are in negative gamma, then they are hedging in a different way. So they are shorting when the price goes down and they're going long when the price goes up. And as a result, you see higher volatility. So what we've seen today, right here, we're going on and we're seeing like a very strong volatility. So whenever we are in a negative gamma environment, that doesn't mean that the price will drop, but that means that the price could actually move very fast to either side. So if you have a 30-point stop loss in a negative gamma environment, that might not work. So you need to maybe adjust that, maybe have higher stop loss, or maybe move to an MQ, and then you can maintain the same kind of like risk and reward. Let me know, Jeroen, Jordan, if that makes sense.
Yeah, before we get too far in, there was a couple questions that before they go too far up in the chat. One said, trying to find it here. When they're expiring, does that mean we should see a move down in theory? So like when you have gamma expiring, does that lead you one way or the other?
It's really depending on the directional exposure, which can be measured by delta. So like it really depends if we have a lot of like negative or positive delta exposure. So gamma would tell you the amount of option expiring, right? So for example, if we go, let me go back here. If we go back to our dashboard, if you can see, this is really the matrix. So here we see the percentage of gamma expiring, and here we see the percentage of delta, and we can also see if we are in negative or positive delta, right? So it really depends on gamma and delta together, but that means that you really need to wait and see what happens at the close to potentially understand what could happen the next day. So, like for example, if the investors are simply rolling to the next expiration, so maybe nothing really will change, because obviously the market makers are closing this and rehedging at the different expiration in the future. If they don't do that, then that means that all these gamma days expiring, there's no need of protection anymore. So there could be a lot of technical movements, and that's why OPEX is very important. So OPEX is normally the third Friday of the month. This Friday, so the 20th of March, 25% of all this gamma on SPX is expiring. Again, what does that mean? It could mean that investors are moving those positions to maybe a further down expiration, upper strike, lower strike. So we need to really see how gamma changes after the event.
Okay.
Or whenever you see a lot of gamma expiring, that means that there could be a lot of volatility on Friday, for example.
Gotcha. Somebody asked how far can I back test the end of day levels? Because it only go back max 1 week. I guess on the dashboard. I know if you have NinjaTrader, you can have it on the platform and back test as far back as you want, I think. But I'll let you answer that, Fabio.
Yeah, so we have basically historical levels on NinjaTrader and TrendSpider. Right now they go back 30 days. So like if you're on Ninja, then you can go back 30 days. So what you see here is basically historical levels of ES, and we can go back further 30 days. On the dashboard, you can go back further. So if you go here on the dashboard, you can actually go back up to 5 or 6 months, I believe. But then you would need to come here, copy the levels and paste them into TradingView, for example, if you're using TradingView. But yeah, you can basically just change the date of the calendar and you can go back 5 or 6 months. What we are doing is we are developing an historical API that will be available after the summer, during the summers at some point, and then basically that's going to allow you to connect to our data with the Python codes or WebSocket or whatever that may be with APIs and stuff, and you'll be able to access the data and potentially have a much larger history.
Okay, perfect. What was the platform you were just showing a second ago? Was that TrendSpider?
Yeah, this is a TrendSpider.
Okay, cool.
Yeah,
All
so
right,
it's pretty nice
cool.
because yeah, it's very similar to Ninja. I don't have Ninja open with me, but Ninja has exactly the same functionality. So you can basically plot historical levels or current level and see basically how they change. So for
Perfect.
example, if we go back a couple of days last week, we were hitting our 1 day max and we drop all the way down here.
There's a question. It says, as an ICT chimp that is getting overwhelmed here, how can I use it in a really simple way to start? And what would be the roadmap to get the most out of this? Uh, so um, you might want to answer that, or I guess there's videos on that in the website. But
Yeah,
how?
and I think that can relate to what we have done with Quin. I think that's actually a great way to showcase the power of AI, I think.
Okay, go for it.
So basically, and then I'm gonna stop and answer many questions. So basically, let's go. So we talked about gamma, we talked about option data, and obviously the question that you sent is perfect. I have never traded option. I don't know what you're talking about. How can I start from zero and can understand how to read that data, right? So option is very, very complex data. It's still a very great data set that has a lot of predictive power, right? It's a forward-looking data set. So whenever you think about options, don't be you always think that, oh, I'm gonna lose all my money because options are gonna expire, the premium is gonna be worth zero. But in reality, options have a really big predictive power, right? Them, how to see them, how to understand it, right? So what we've done is we've created really advanced models right here. But of course, if you don't know how to understand that data, then it can become quite complex, right? So what we've done is we presented our new AI, and I'm going to share with you guys some of the things that you can do basically to help you guys uh, leverage the data and understand how to use it, and of course, prepare for the day and basically be actionable. So this is what AI can do for you. So first thing, like, what is the problem, right? So we know the statistic, right? 90% of traders are not consistent, they lose money in the market, but it's not because the traders are not smart enough or they're not prepared or they don't work hard, but most likely it's a problem of the tool set that you have and the fact that you are using most of the time fragmented research. You use maybe multiple platforms and you are not able to connect the dots, right? So if you're using, for example, order flow on one side, then you use news on the other side, you're not able maybe to connect everything. And basically that's gonna probably maybe give you false signals and you're not going to be finding the edge, right? So since today, obviously, like this is the statistics. Of course, there's many successful trader, but overall, a lot of the traders in the market tend to lose money because they have this gap into the tool set. I used to work for Bloomberg. Think about the Bloomberg terminal cost about $30,000 a year. Until now, like not many retail traders could afford that, right? So you obviously there's a lot of information that is sitting there that not many people can access. So it was an elite tool for institutions. Um, with AI, basically everything changes, right? So whether you do it or not, whether you think it or not, whenever you trade, you do essentially four things. First, you need to learn. You need to understand the asset that you trade. Second, you need to understand the market conditions. So, for example, what we talked about, if we are in a positive gamma, negative gamma, what could happen? Third, you want to screen for opportunities. So maybe some of you only trade one asset, but there are some traders that are looking for multiple stocks and they want to understand what is the best asset that they can trade. And second, how can I manage the trade, right? Once you decide what to do, how can I then trade and manage my profit, my stop loss, and so on. So basically what Quin does now, and we're going to show you some examples, is really combine all of these into one place. And essentially, why is Quin different from all the other AI tools like Claude, ChatGPT, Gemini, and so on? First thing is we've trained Quin with 20 plus years of institutional experience. So my team has worked in the market, ex-market makers, developers. We fed Quin with really internal research, 5,000 plus papers, 20 years of our trading journals, so our trading accounts have been there. Documentation, hours of our academy is also in Quin. But then the most important is it has data, right? So Quin has access to all our data. So if you guys have tried MentorQ and you've been successful and you like our data, all the other AI tools don't have access to that data, right? So ChatGPT, unless you put the data in, you extract the data, and you plug it into ChatGPT, it doesn't have access to our data, our models. On top of that, we build our intelligent layer. So the ability to do a lot of things, screening, researching, historical analysis, and so on. So we're going to show you some of it today. So let's keep here. The other important part that you need to understand is what AI does well and what AI does not very well when it comes to trading. So on the left-hand side, we can see that AI is very good at managing unstructured text, whatever it's reports, news, documents, all the things that are written. It's great at doing that. When they stop doing a good job is when AI needs to analyze structured data, so numerical data like order flow data, like tick by tick data, gamma data, option chain, all of that. AI will always give you a good answer that sounds good, but in reality, sometimes the data can be wrong. So whenever you're trading, you cannot trade with the wrong data, right? So this is like kind of like a big problem with AI. So what we've done is really we kind of have solved that, and we have created Quin, which is our quant engine for retail traders. Actually solve that problem. So Quin basically has our data layer. So all our data is there. I think we have over a year of data available there. And then obviously our knowledge is also there. So we've trained the AI to understand the data as we were trading it. And then of course then is built with intelligence, right? So it can cross-reference our data and it will give you most likely the correct number without hallucination. So basically, if we do a comparison, and we're not trying to give you guys a bold statement, we are better than all the other AI tools. We're just saying that basically, when it comes to trading, the standard AI tools, unless you're feeding them data, do not have access to data. So they do not have access to live market data, all of that stuff. They do not have access to our data, first of all. So if you like the MentorQ data, then of course the other AI will not have access to it. And there is a very high risk of hallucination. So if you ask ChatGPT, give me all the stocks with an IV rank of greater than 70%, most likely the data might not be completely correct because they are scraping, trying to find that information to give you an exact number. So we are within Quin, we have a low hallucination risk, which is very important for trader. And of course, then it's really all our proprietary tools are there. So I'm gonna go into and show you some example, but let me know if there's question, Jordan.
Let's see. Only questions that I see are, do levels change throughout the day? I can answer that. The futures data does not change throughout the day. That's end of day data only, but you can convert the corresponding ETF and have intraday data off of that. And I do that. It works pretty well. So if you know, like for NQ, use QQQ, for ES, you use SPX, for oil or CL, you use USO, and you can have it updated. How many times is it updated a day? Like 12 times a day or something? Fabio?
14.
14 times a day, yeah. So that's the answer to that. And the other one people are asking is, or some people, do you have, will there be available ever API access for programmers who want to program their own strategies and indicators off of MentorQ data?
Yeah, so there's actually two great questions. So the first thing is that we, on our next release, which is going to come in around July time, we are going to release basically a few new things that are going to be very, very important. First, we're going to have our own charting within our application, so you're going to be able to access real-time data on our platform, right? That's going to be key because I know a lot of people have a lot of different platforms, but we're gonna have one as well. We're gonna use the TradingView charting tool there, so it's gonna look exactly like TradingView. Second, we are going to move to real-time gamma levels on stocks, ETFs, indices, and futures. So when you say right now we have end of day, yes, we are going to move to real-time intraday futures level in about 3 to 4 months. So stay tuned for that, guys. And second, API, absolutely, that's part of our next roadmap item. So once we release the app, then the API will be next.
Okay. Um, somebody's asking,
Real quick, Jordan.
yeah, go ahead.
Yeah, no, I appreciate you reading the chat. I'm recording this right now, and so like I'm not able. I have it full screen. I'm not able to look at the chat, so I appreciate you going through and like answering or asking the questions to Fabio. I can't answer any of them, so yeah, I see a lot of questions coming in, guys. That we will get to it. I promise. don't worry.
Or try to,
Yeah,
at
we'll
least.
try to. Don't. All right.
Okay, cool. Fabio, somebody's asking, is it necessary to know if we're in negative or positive gamma territory to trade those levels using order flow, or can we simply just trade based on what we see? Um, if you want to answer that, you can, or I can answer it. It's either way.
I think, I mean, order flow is definitely a very powerful tool. So I think if you can combine both, you'll get, a greater edge, I guess. But what's important to understand is that uh, by looking at where we are in the option market, that can also help you get a better bias on what you should be doing whenever you look at order flow, right? Because if you know that we're going to be in a very volatile day, then order flow can give you the hint. But then, of course, you need to understand that because we're going to be in a more volatile day, maybe you want to manage your trade differently. That's the key.
Yeah, that's basically what I was going to say. Like if you're a negative gamma regime, then the moves will be more volatile. So you want to just be aware of that. And if we're in positive gamma, then they're going to be more mean reverting kind of sticky moves. So like more reversals and stuff. So you kind of just want to keep that in mind as when you're trading. Is that correct, Fabio?
Exactly. Yeah. Exactly.
Okay,
Makes
perfect.
sense. Yeah.
Okay. All right. Continue. I'm sorry, Al. If there's anything else, I'll.
Yeah. So going back to the question about, I'm new to these things. How can I learn to use it? So this is exactly what Quinn can do for you guys. So the first step is we open Quinn from the dashboard, and we can have a few different things. But I'm gonna before starting a new chat, I want to go into the Inspire Me section, which already has some really interesting prompts that are available to you. So what can you do with Quinn? So first, you can learn. So we have a lot of documentation, we have a lot of videos on our academy, and of course, time is very important, right? So how can you learn about these complex things without having to spend hours and hours and so on? So, for example, the first step is read this prompt here. I'm a futures trader. Could you prepare a 7 days learning path to start using MentorQ, right? So this one is really the first step. If you're new to the option game, if you're new to gamma levels, if you're new to kind of like this environment, then what can I do? Well, I can start by learning. So the learning part is really accessing about 1,000 hours of video content, documents, all of that things simplified for you by the AI. So let me see. I think we have. So there was some problem with the LLM APIs today. So I hope it's gonna work. But let me see. Right. So here, basically, you have where to start, right? The foundation. This is really the link, all the links to our documentation, our courses, your trade plan, and then every additional resources. And then, of course, you can iterate, ask more questions. So that's the learning part, right? And the second step is really, can I now access data, right? Um, so here you have a lot of different things that you can do. So whether you're futures trading or whether you are option trader, zero DTs, financial research, but basically I want to show you just a simple prompt here, and maybe you guys don't trade stocks, but this is really important to give you an understanding on the kind of things that you can do with Quinn. So you can access data, you can compare historical data, and you can run analysis. And then we're gonna go into an example here. But here, for example, think about what we are doing here. We are asking our own database to give you access to historical data for the past month on 4 assets, and then compare that. So we know that basically by looking at the data, Tesla sits at the lowest heavy rank. That means that the volatility on the asset is the lowest, and Nvidia is the most expensive. Why is this important? Because if you are an option trader, you could actually trade this with either spreads, different strategies, and so on. So this is very, very important, right? So then we can go back here and we can do some more interesting analysis, right? So this one is really cool. So show me in which direction the skew 1 month is moving for sector ETFs over the past week. So obviously there's a lot of things going on with commodities, with energy right now. So how can we use the data to understand where the market is positioning and what sector could benefit the most? So I'm going to ask this question here.
I wish
Sorry
we had
for
that learning roadmap when I was getting started with MentorQ a while ago. Would have made life a lot easier.
Yeah, and sorry for the problem. We see these delays because there was some outages on the cloud side today. So I hope it's gonna work, but it doesn't depend on us. There was really Claude AI is having some issues, so our LLM is having also some issues. So I'm sorry for that. All right. So we're getting something here. Right. So here, for example, think about how much time it would take you to go through our dashboard, to go through like 10 days or whatever, 20 days, 1 month of history, pull up all these data, and then understand it, right? So what we see is here we have some directional shift. We have utilities, real estate, and industrial that are really showing some really shift in direction. The most volatile, of course, are staples, discretionary, and then of course we have stabilizing sector, healthcare, and technology. So what we see here essentially is the change in the skew over the past 7 days. So when we have a positive skew, that means that we are in a put bias environment. When we have a negative skew, that means that we are in a call bias environment. So whenever we go and see the data on our dashboard here, so this is what is comparing where we stand with the skew over the past weeks. So the movement in the skew can help you understand where the option traders and option market is positioned and can give you sentiment indication of where the flow is moving on different sectors, right? But then the most practical thing is like, okay, now I want to start preparing my day. Give me a trading roadmap for SPX. So this is really running our model. So it's looking at our Q score, how this has changed over time. And then the most important is really gamma exposure, right? We're in negative gamma, volatility. And then of course, here we have our gamma levels and basically our blind spots and all of that. And then basically you can have your trading roadmap right there.
Fabio, there's a question in here that says, so when real-time data comes out in 4 months, will it be like a heat map? And any advice how to trade real-time gamma data levels when the end of day levels when this update comes out? Well, I'll let you answer about the heat map, but the end of day levels will always be more important because the big boys aren't trading. Uh, they're trading on a little longer term horizon than we are, so they're not necessarily concerned with the intraday data as much. If I'm saying that correct, Fabio.
Yeah, so I mean, always think about that. What moves the market is not us traders that are trading, few futures contract or the retail traders, right? So who's moving the market is really the big hedge funds, the big asset managers, and they do not day trade. They do not look at charts. They simply basically trade based on data. And normally they would come into the market either at the open, so between 9:30 and 10, maybe 10:30, and then they would come into the market at the close between 2:30, 3:30, and so on, right? So they would place their bets for the next day at any of those times, right? Typically that's when they execute. They might do execution during the day, but most likely they're going to execute at the open or at the close, right? So the end of day are going to be very, very important because that's really how the market has closed for the day. And those big levels will probably be the same the next day unless really a big event happens. So if you have Nvidia reporting earnings and everything, the stock goes up 20%, then of course at the open, everything will reposition. But in normal days, which is probably 85% of the days throughout the year, the big levels might not necessarily change throughout the day, but yes, the gamma levels, the various gamma levels will change. So for example, if we go back to our chart here and let's look at SPX, and here we have our end of day levels. So let me just filter it out here, just look at primary levels. We're gonna have our end of day in red, and then we're gonna add our intraday, and we're going to make it a different color. The yellow one are the intraday levels. The red ones are the end of day. So as you can see, the put support 0 ETs did not change here. 1 day minimum changes at the open. The core resistance in this case dropped down. So what that means, this is kind of like a bearish sign that went from yesterday all the way up here to 6,785, all the way down to about 40 points, 35 points, 6,750. So, and the HVL moved down as well, right? So the gamma shift moved down, and the HVL on all expiration did not change, but the 0 ETs data changed, right? So this is kind of like important, and the put support also did not change. So that's why, like, end of day are quite key for sure.
I'd say I use end of day 90% of the time, and I would find the intraday I find interesting, like towards the end of the day, like if you want to trade at night, to use the last snapshot of the day, that's when I would find it useful. But otherwise, I use mostly end of day.
Yeah, I think another useful part about the intraday is the change in the 1 day main and 1 day max. So we recalculate that at the open. So the first snapshot of the day will also have the updated 1 day main and 1 day max. And the reason why that is important is because if something happens overnight, then that will reflect the volatility for the day. So it will adjust based on the gap that we see. This is more like relevant for indices and stocks rather than futures, because futures are trading 24/5. But yeah, when you look at things like SPX, QQQ, then obviously you see that down the 1 day mean move down. So if you are planning a day, then you might want to use also this level to potentially look at the volatility for the day.
Fabio, I know people like to see examples. Can you quickly pull up NASDAQ with a QQQ overlay on it? Because I'm looking at one of my charts and it's a really interesting example that happened since we've been on the call. So I was looking at that the GEX3 there and the HVL. I mean, it's like a perfect bounce to the touch since we've been on this call for the end of day. I believe these are I have end of day levels on there. So yeah,
I got the QQQ level right here.
yeah. So I mean, that's like perfect. So for anybody who wants to know how to use it, that's how I use them. Basically, looking as them as support and resistance too. They work fantastic.
And if you want to look at example, let's go over, for example, the historical levels that you can access on Ninja and Transpider. Like, for example, if we look at a couple of days ago, we touched the 1 day max, went all the way down, we touched it again, went all the way down. Going back to previous days, you have HVL right here, and we can look at NQ.
And for anybody who doesn't have Ninja, you can get a really, really inexpensive prop evaluation from all the firms, and it comes with a free Ninja Trader license with data, and so you can just use that to keep it up on the side.
Like, I mean, if we look at NQ yesterday, like, we X1 all the way up, core resistance, boom, but bounce back. So it's pretty nice. Here, Jacks 3 all the way down, all the way there. We stop at Jacks 2 right there, move back all the way up. I think this one was a good one. I think we were live using this one. Drop from core resistance, and then of course the next target 1 day min. What else? Yeah. So obviously we had the rolling, so this contract was not really heavily traded last week. So we just rolled over this week on NQM, but we can also look at NQH, for example. which was the previous contract.
Jaron, do you have anything you want to say about you using how you use the gamma levels or?
Yeah, I mean, so far, and I learned a lot today about more about using the intraday levels. I've mainly kept it to using just the end of day levels, and I have it filtered to where I'm just using the gamma, the jacks 1 through 5, and then the blind levels 1 through 5. Obviously, I know the 6 through the 10 can still have a lot of significance, but I've seen the 1 through 5 have the most support or resistance or magnetic draw, and it keeps my chart as clean as possible. Like, obviously, I'm mainly an order flow trader, but when I see the gamma levels or high volatility put support line up with levels that I'm already looking at, it gives more conviction in that trade. And so if I can align value areas, supply demand with a gamma, a gamma 1, 2, or 3, that's been a very strong reason for me to enter into a trade if the order flow makes sense. So definitely learned a lot today, right? There's a lot more that goes into it, but keeping it simple for me has been mainly the reason I've had a lot of success the last month or so.
You also use the levels as sort of soft targets. So in other words, as we're approaching an important level, you're really trailing tightly because you know that there's probably going to be some kind of reaction or possibly reversal at that level.
Right. Even
Uh,
yesterday, like yesterday, it was so simple. We opened up, I think it was at the gamma 2. We ran straight through it, a lot of aggressive buying, and the only thing to the upside at it was like 25 100 was call resistance. So it's like, okay, well, buyers are buying in an overnight uptrend with that call resistance above us, found a way to get in longs, took my profit right there at the call resistance. I think we went up 10 15 points past it. Then buyers stop buying, sellers step in. Cool. Now I can short from that call resistance back down to the gamma 2. So I would say yesterday was probably a positive gamma day because we were just rotating between the gamma 2 and call resistance, and there wasn't really acceleration between each level. So when you see days like that we're consolidating at a gamma level or consult like at a gamma 2 and we're spending a lot of time there, you're going to expect, like Jordan said, a lot of mean reversion days, and you're not going to try to trade momentum breakouts because you're not seeing it in the order flow. You're not seeing the levels. You're not seeing interest past those levels. So you kind of know where to take profit, know where to scale, when you should go break even, and it helps you manage your trades a lot better.
yeah, for sure. A couple questions here. Somebody's asking Fabio, they say, I trade Asia mainly. Should I use the gamma levels from New York or will the levels update during Asia? So the levels come out at, is it 10 or 11 Eastern time, correct?
Yeah, 11 p.m. Eastern time.
11 p.m. Eastern time. So that's in the middle of the Asia session, I believe. But I think you can also use the converted levels. The last snapshot of the day might work well too.
Yeah,
Um, But just, I mean, I guess everybody should remember that when you're trading Asia session with the US indices, they're trading off of just air because the underlying is what they're based on, and the underlying is closed at that time.
yeah,
So you just have to be more aware of that. So, like, I would use if you trading Asia session, maybe you want to trade the Japanese yen. Which their levels for and stuff like that, kind of that are actually the underlying actually trading at the time of the Asia session. So that's just my thoughts on that.
yeah. And also,
Uh,
like in a few, let's say, Jordan, in a few months, we're gonna have live levels on futures, so that's gonna also help you guys for the London session, the Asia session, for sure.
um, so somebody's asking which hold more weight, end of day levels or intraday. We've already, I think, answered that, but it's the end of day levels hold more weight. Um, and here, uh, so somebody else says, hey, how can you please ask how GEX levels will react depending on whether they are positive or negative? I know GEX 1 has more gamma than GEX 4. So if we're in negative, you're going to see more volatility in the moves. And if we're in positive gamma territory, we're going to see more mean reverting. So,
Yeah, and I can also add to that, Jordan. I think it's also important that not only look at the levels on the chart, but also come and see. So all the levels on the chart are referring to this chart here that we see, which is our net gamma exposure chart. Whenever you see, for example, let's say this level here, which is 6,700, right? You also want to compare the width of the bar to whatever the bigger level is, so the output support, because the stronger or the higher the bar is, then the more of a reaction there would be. So what could happen at the level? So whenever we let's go and let's just look at here. What could happen, at Jack's tree, which is the third largest Jack's level? There's a couple of things that could happen. First, this is going to find support like what happened there. So the price will go here and then bounce back. Or it could happen that we are at an inflection point. So if when we are in negative gamma, just remember, guys, that sorry, let me share this. I'm not sharing the right screen. So what I was showing is whenever we get to this level, we could basically face a support, and the price moves up like it happened like right here. Or think about this could become a break of a support or resistance area. So this becomes an inflection point. So the more we are in negative gamma, the more volatile the market is. And also remember the slide, market makers are selling when the price goes down and buying when the price goes up. So it could be that if we see a lot of gamma here and there's a very like negative day, then this becomes an inflection point because the move is accelerated by this hedging activity.
Perfect. Just trying to think if there's anything. Does so did you go over everything new with Quinn, or was there more stuff that we missed?
With Quinn, I don't know if it's gonna be definitely there's new stuff. So we can now actually screen for assets, right? So future screening is coming soon. So you're gonna be able to search for futures contract. It's not available yet, but it's gonna be available soon. But basically, like you can do some really complex queries here. So here I can run about 97 quantitative factors on the screener, and basically you can filter it out. So here I'm looking at stocks that change from bearish to bullish over the past week. So I can get an idea here, but I can also create something very, very complex. Like show me stocks that saw an increase in call OI from last 7 days greater than 40% deposit.
Real quick, for anybody who's new here, I would definitely recommend going through those videos that Quinn will outline for you, and all the starting videos. And I also did a video that Jean put up in WAP that basically shows the basics of what I do with it and stuff. So um, if you want to watch that video, that'll give you an idea of how to get started if you just recently got mentored here.
So this, for example, Jordan, what we see here is a very, very complex problem for AI in terms of looking at past data. So what we are asking here, and maybe like guys, because you trade future, you might not be relevant, but just to show you what you can find. So I'm looking for stocks that have seen an increase in call open interest greater than 40% compared to 7 days ago. So essentially what the system is doing is pulling up historical data for thousands of assets and comparing which one has increased by more than 40%. Is also screening for positive gamma, right? So here we have it here, and is also screening for an IV rank greater than 50%. So I want to see, for example, stocks that have seen an increase in call open interest. So maybe they are turning more bullish than before. They are in a positive gamma environment, so there is stability in volatility, and IV rank is greater than 50%. So if I want to sell option there, I'm getting a lot of premium compared to a lower IV rank, right? But then I could add, for example, I could actually create something more advanced. So show me So again, here you're expressing an idea in plain English, and the system is actually looking at a lot of different quant metrics, and it's going to give you basically the results. So here again, I'm looking for Jack's percentile 1 year greater than 90%. So I'm looking at stocks that have a very high concentration of gamma compared to where they've been in the past year, with an IV less than 30% and a market cap greater than 20 billion, right? So very, very simple. I can start from here, and then I can kind of drill down and go and do my own analysis. I can ask Quin to run an analysis on a ticker. So if I wanted to learn about any of these, I can do that. So I think, yeah, this is really, really great. We're very happy about the results of this. It's amazing. So if you guys trade stocks, indices, ETFs, you're going to be able to use these kind of tools as well. And here in the explore section, you can look at different strategies. So if you want sell option, buy option, swing trading, directional trading, you can also find a lot of good information here.
Awesome. And Fabio gave like last time, an amazing discount codes and for this group. So Jaron, I guess do you have them posted somewhere, or can
Yeah,
you post them?
it's all in the community updates. It's like the last 1 or 2 updates. If you just go to the updates and go there, there's an insane discount code for it's $59 a month, I believe. So,
Yeah. And then there's also, if you want to sign up for a year
yeah.
or 2 years, it's also a great deal. And I guess you'll pin that when it goes out on YouTube if people aren't in the community or whatever.
Yeah, I will literally get this uploaded on YouTube as soon as this is over.
All right, cool. Fabio, did you have anything else you want to add? Because I know everybody's going to want to get off in a couple minutes. For,
Yeah, no, I think yeah, I think all is great. And again, Jaron, Jordan, thank you so much for having me. Thank you guys for being here. There's a lot of you, so I'm really excited. And again, if you have questions, just send it to Jordan, send it to Jaron, and we can send you guys a reply very, very, very fast. So happy to give you that as well.
Yeah, and I know Jaron and Eric were going to put in something in the chat area where for mentor Q questions. So I can either answer them if I have the answer, or if not, I will forward them to Fabio and get the answer for you guys. So anyway, I think that's it. Great, thanks for coming on again, Fabio. I really appreciate it. Everything's looking awesome. Keep up the amazing work. And the discount, there's no, Fabio, somebody's asking how long is this discount code going to last for? I don't think there's an actual end date as of now. Is that correct?
Not as of now, yeah. So yeah.
Okay. And once you sign up, you are locked into that rate, right? Is that correct?
Exactly. Yeah. Yeah.
Perfect.
Exactly. Yeah.
Okay.
Until your subscription is active. So if you don't cancel it, you're going to be renewing at the same rate.
That's perfect. Okay. Awesome. Thank you so much. I really appreciate it. It was great talking to you again.
Thank you. Have a good day, guys, and
Right,
good luck with FMC. Have a good training day.
All right. Take care. You too. John, are you going to end this, or you transfer to something else, or what do you want to do?
Yeah, I'm going to go ahead and end it there. Pretty solid. I'm excited to use the AI.
Yeah, it's awesome, and it's only